My name is Dave Montero Rosen. I'm one of the three partners of the Tin Cup RV and Mobile Home Park. We're here to speak to you about the investment opportunity in Tin Cup, an investment fund that purchases, operates, upgrades, undermanaged mobile home and RV parks in the U.S. Our expected returns based on our existing park are 12 to 18% cash on an unlevered basis. Previously, I was the Chief Investment Officer of the Graham and Dodd Fund, a value-oriented stock fund, value defined as asset, free cash flow, and free cash flow growth. Before that, I was an II-ranked sell-side research analyst and head of research at major Wall Street firms. My undergrad is from the London School of Economics, and I have an MBA in finance from NYU Stern. Our third partner, Quentin McNew, a former ROTC officer with an undergrad and master's degree from the University of Illinois. Quentin is running our Tin Cup RV, a 65-pad RV park in Champaign, Illinois, and could not be here today. Quentin also manages a 650-pad mobile home park in the region on contract. Quentin and I were introduced years ago by mutual friends in Champaign. Though different generations, we both grew up in Champaign, Illinois. Quentin has been successful in managing and improving parks and has been upgrading them and their systems for years. He has managed to return 15% plus on a non-levered basis on Tin Cup. I want to introduce my partner, Ron Grobeck.
Thank you, Dave. My name is Ron Grobeck, and I too have been in the investment business for 25 plus years. I graduated from the University of California at Berkeley with a degree in economics and went on to get my MBA at Columbia University in New York. I think Dave and I have always sought investments that can earn higher returns in less well-traveled markets. In fact, Dave and I first worked together years ago at the leading brokerage firm that invested in distressed and bankrupt securities. Following this, I went on to lead and manage high-yield funds, debt funds, reaching $5 billion in assets under management before once again teaming up with Dave at Graham and Dodd Funds. So with Tin Cup, we have found that attractive returns can come from purchasing undermanaged mobile home and RV parks. Typically, these parks have less capital, have skimped on investment, and are run by small-time operators. Our strategy is to purchase a series of these parks, update them with professional management, and invest modest sums in infrastructure to improve operations, reduce costs, and improve marketability. Simply applying efficient operating procedures will increase rents, revenues, profitability, and in turn lead to improved demand and a real potential to expand the number of slots at the park. To put it in perspective, today, large, well-run parks can cleanly generate returns of 10 to 12%. This is attractive on its own. With our strategy of value add, we're targeting returns north of 15%. Dave?
One thing we think is really important for you to understand is Tin Cup does not own mobile homes or recreational vehicles, and we do not have the intention of ever doing so. It is the pads we own and rent. These do not have the normal landlord-tenant regulations in most markets, which is very advantageous to the structure of the fund and what we are doing. We're leasing out the land. We are not leasing out as we would if we were an apartment building owner. Very, very important in terms of what the legal liabilities are and all the other things concerning mobile home parks. Ron?
Yeah. Again, thanks for the opportunity to present to Yale Prospect Fellowship. We think that Tin Cup fits well the fellowship's objectives. An attractive investment platform that is also uniquely off the mainstream. One where the risk can be managed by an experienced and professional team. One that offers early access and a growing platform that can reach more than $1 billion. And one that offers meaningful benefits to communities desperately seeking affordable housing options. Thanks again for the opportunity to present Tin Cup.